Thank you so much for stopping by my channel, 521 Investment Wealth Builders. On my last video, I went over some of the basics of fundamental analysis, and I gave an example of Red Lobster, the store that closed in my area. Now, Red Lobster, the corporation, had a lot of financial problems. Let me tell you something. It's so strange to drive by that Red Lobster because I pass by it often. No cars are in the parking lot. Just a nice vacant, looked like the building had recently been renovated, and there's nobody there. Nobody's walking by, it's just sitting there, and it has a nice backdrop because there's a pond behind it. So the Red Lobster, the building, looks successful on the outside. But when you're dealing with fundamental analysis, which is looking on the inside of a company, there were a lot of red flags, a lot of red flags. So hopefully one day in the future, somebody will come and take over that building. But as I said, it's a nice location, but looking successful is one thing, but being successful is another. I'm gonna say that again. Looking successful is one thing, but being successful is another. But on today's video, we're going to cover how beneficial it is to understand technical analysis. Now, as a trader, which I am a trader and an investor, and I'm more of a swing trader, but always invest for the long term. Again, I'm more of a swing trader, but I'm a long-term investor. Now, technical analysis is studying historical price and volume to identify and project price trend. So technical analysis, when you hear that word, you're gonna have to study price, you're gonna volume to help you identify price trend. Other words, when something is trending up, it may be trending sideways, or it might be trending down. Now, have you heard these words before? The trend is your friend. And the stock, I want to give an example that has been trending in the news a lot over the last 8 to 9 months has been what? NVIDIA. Now, it recently had a stock split of 10 to 1. And after that stock split, the price went up. It began to trend up, and it reached maybe $135, $140 a share, and then it started to do what? Downtrend. So it began to trend up, and it began to trend down. Now, I think NVIDIA is a good long-term investment. So, even though it's been trending up and trending down, maybe in 3 to 5 years, that $120, $25 price, it may be over $200, $300. And I'm not telling you to buy NVIDIA, but I'm saying I think NVIDIA is a good long-term investment, but who knows? Who knows? Because stocks go up, stocks go down, but who knows? Only time will tell. Now, market trend is the direction of the asset price over time. Market trend is the direction and a price over time. In technical analysis, when prices experience a higher high and higher low, they are said to be in an uptrend. So that's, if you heard any financial news lately in the last week or two, and if they're discussing NVIDIA, it could be any stock that's uptrending, they're actually talking about higher highs and higher lows. Now, years ago, I always thought when you hear something about uptrend, you know, it's a stock that's going straight up. You look at a chart, because you have to look at a chart, and it looks like it's going straight up. But no, it's talking about higher highs and higher low prices. A higher high, the price, and a higher low, the price. And I'll give examples on my next video when I cover charts. I'm going to go with higher highs and higher lows. but it's said to be in an uptrend. So after Nvidia stock split, it was in an uptrend, experiencing higher highs and higher lows. Now, this is often referred to as what? A bull market. And you hear a lot about a bull market all the time. I want a bull market. I want to invest in a bull market. But there's a bull market and there's a bear market. Now, according to the SEC, a bull market is when a stock, an index, rises more than 20%. Again, the SEC says a bull market is when a broad market index rise over 20% over at least a 2-month period. That's a bull market. But a bull market is no more than an uptrend of higher highs and higher lows. Again, higher highs and higher lows. That is the uptrend, and that is referred to as a bull market. Now, in contrast, when prices are said to be in a downtrend, they are suffering lower highs and lower lows. Again, uptrend is higher highs and higher lows. A downtrend is lower highs and lower lows, and that's known as a bear market. And a bear market occurs when prices are in a market decline by more than 20%. Now, that's often accompanied by negative investor sentiment in a weakening economy. So there's the bull market, the higher highs, and there's the bear market, the lower lows. So one is going up, the other is going down by a certain percentage. And again, on my next video, I will show you this on a chart. And also I mentioned volume. And volume is the total number of shares bought or sold during a specific time period as in a trading day. Again, volume is the total number of shares bought or sold during a specific time period in a trading day. So when you hear words like this on your favorite financial channel, they are referring to this type of language. Remember, I did a video. This is nothing but financial language. The more financial language you learn, the more you can profit from it. So if you want to be a successful trader, again, a day trader, swing trader, momentum trader, using technical analysis, learning how to read a price chart, and spot areas of supply and demand. Again, you're gonna have to learn how to read a price chart and then identify areas of supply and demand. And you probably heard that, but I used to hear that all the time. And to be honest, I had no clue what they were talking about. I used to hear supply and demand on those financial channels and didn't have any clue what they were talking about. And supply and demand can create trends, whether it's up or down. Again, supply and demand, and they can create trends. You got to study that stuff, and then you'll learn how to spot trends. Now, demand and supply zone refer to areas on a price chart where significant buying or selling pressure has occurred in the past. That's your demand and your supply zone that creates those trends. There are areas on a price chart where there's buying or selling. Going back to Nvidia, it started to trend up because people were buying the stock. They were buying because you heard a lot about what? AI. You heard AI. You And people say you were buying. The big institutions, hedge funds, pension funds, they were buying, and also the retail investor like me. People were buying, and that was causing Nvidia to trend up. But when it reached 125, 130, somewhere in that, it changed direction. It started to trend down because they started to sell. They began to sell it, and then the price started to go down. So again, we're talking about demand and supply zone. So you're going to have to learn about supply and demand zone. Now, demand zone indicate levels where buyers are dominant. They're dominant, and they push that price higher. They're dominant. They're taking the lead. They're just buying and buying and buying and buying, and the price is going up and up and up. So you might see that in your favorite chart. If your whatever stock, if you have a favorite stock, even if you're trading and it begins to go up and up and up, that means there are buyers. They're just buying and buying, and they're just pushing the price up and up and up. So you have more buyers and less sellers, because the buyers are pushing it up. It could be from $5 to $5.20, $5.30, $6. They're just pushing the price up. And then when it hit a certain level, the sellers come in and they try to push it back down, And supply zone are areas where sellers overwhelm the buyers. So that's it. Demand zone, always think about this. Think of buying. And supply zone are sellers, and they try to drive the price lower. And that's, like I said, when Nvidia hit the 125 and 130 at the recording of this video, they begin to push the price back down. And that can happen to any stock, not just Nvidia. It could be a stock in your portfolio. It goes up and it goes down. So what's going on? There's a lot of what? Buying and selling, or demand in what? Supply zones, where people are battling out, trying to push the price up, some trying to push the price down, and sometimes it may go sideways. And when you have excessive supply and demand, it causes congestion, overcrowding, clogging areas. And in technical analysis, this is called support and resistance level. So when all that fighting between the buyers and the sellers, and then the areas begin to clog up, nobody is pushing forward. The buyers can't get the upper advantage. The sellers can't get the upper advantage. And then it's like it's going sideways. And what that causes is support and resistance levels. Support occurs where a downtrend is expected to pause due to a concentration of demand. I'm going to go over that again. This support level occurs when a downtrend is expected to pause due to a concentration of demand. In other words, what that is saying, there's a level that the sellers can push the stock down to, but the buyers try to hold that level. In other words, it's a support level. It's right there. It's at a ground level. They're trying to keep it at that certain price. The sellers want to push it down, but the buyers are trying to keep it at that level. That is your support level. And also, resistance occurred where an uptrend is expected to pause temporarily due to a concentration of supply. And all that's saying is, when the buyers are trying to push it up, there may be a resistant level where the sellers come in and they'll try to stop the price from going up. That's resistance, where you have more sellers than buyers. And that's a resistant level. So you have the two levels again. your support, and your resistance level. One is your foundation for from your price going down. Another one is a level where the sellers try to keep the stock from going up. So there's infighting. They're battling it out. There's war going on between the buyers and the sellers. But eventually, one side is going to win. Either the buyers can push the price up or cause that stock to trend up and break the resistant level, and there's an uptrend. Or the sellers can force and keep pushing that stock down, and it breaks the support level, and there's the what? The downtrend. Now, on my next video, I will show you the basics of how to read a chart, its function, and the benefits of understanding the chart. It's good to look at a chart, but it's better to understand the language of a chart. And I'll show you the uptrend on the chart. I'm going to show you the higher highs and the higher lows represent the uptrend. Then I'm going to show you the lower highs and the lower lows representing the downtrend. And I'll show you also on my next video the support and resistance levels, so you can get a visual of what I'm saying. Now, if you want to get into financial gain, start to learn the charts and not just see it on your financial chart, not just going to Yahoo Finance or going to CNBC or Fox or whatever financial and seeing it, but actually opening up a brokerage account and looking at your chart in your brokerage account and begin to learn how to read that chart and learn about uptrending and downtrending. And you and I can do that, because guess what? This is foundation, fundamental information. Other words, this information is everywhere. But you need to open up a brokerage account to get into the financial gain. And there's a link in the description of the 3 brokerage accounts that I use: Interactive Brokerage, Charles Schwab, and Moomo. Again, get in the game and don't just be an outsider, and learn how to play the game and profit from the game. And profit are a byproduct of systems and strategies. Please subscribe and share this video. Until we meet again, peace.